Al Fullerton from Aliom Financial Markets is with us in studio, and we're talking about the economy and we're talking about big business with all the various aspects of the election 2010 campaign happening. Now, Al, just to return though to one of the comments, we were just talking about the US and what the Fed does from here. We've had a viewer email come through, a regular viewer, I know that, saying, tell us where the jobs are going to come from in the United States. We've got non-farm payroll numbers. Where are they coming from?
Okay, well, I mean, I think in terms of the job recovery there, and I want to reiterate this point, is that it will take time. I'm not saying that this is going to be a quick fix solution. It will take some time. Perhaps it will take some additional measures from the Fed to come in there. But what we are seeing is this expansion. And so in terms of a lot of squeezing of margins, and this has been a thematic that's been going through the reporting seasons, people have squeezed their margins. They've done that by offloading people when the market was going down. And as we're slowly starting to see a build up there, then the demand will slowly return. So it is going to be a longer process than we'd hoped, and we know that. And that's where it'll come from. It'll be a longer process, and as I said, we'd like it to happen overnight, but slowly but surely it will start to grow, and that demand will return and some normality will come back into the market.
Yeah, it is such a difficult thing though. Like, you know, even Procter & Gamble overnight, they're spending up big on marketing the products, they're launching new products, they're slashing prices on everything.
Yep.
Can't even get the sales up right now.
Right.
So again, that's not a company that's going to be hiring,
car sales coming out, and they've increased. And so it's this mixed data. It's a mixed bag of goods over there, and it will continue to surprise to the upside and the downside. And it will take time. I'm not saying that it's not going to be a long road ahead for the US. What I am saying is that it's trending slowly and gradually in the correct direction, and over time it will continue to gather some momentum.
I know that also when we spoke to Andrew Pease from Russell Investments this morning, he's saying that the fact that the US companies are more cashed up now, they're more profitable. It's not the kind of environment where they slash jobs, I guess, and slash spending. It's just that they're just trying to keep it together, I suppose.
Well, that corporate bond issuance, we've seen that. We saw the latter half of last year, the corporations were heavily into raising the capital there and getting the balance sheets fixed up. And obviously this year the markets have pulled back, but they remain cashed up there, and they took advantage of those times. Corporate bond issuance is at 2004 levels. It's really very low, and so you know, they are cash up. They are in a good situation. It is uncertain, but by no means are they in this dire situation that they were on the just prior to the GFC.
And if we want to talk margins, I mean, there's already been a few clues for us for our reporting season. AXA was speaking of pressure on margins. I know there was an analyst note out this morning about CBA looking ahead to its numbers next week. Again, just that issue of margin pressure came up. Is that going to be a theme across this reporting season for us?
It will be, yes, indeed, and it was a theme in the US, and it will be a theme that will be going through ours in terms of the margin, in terms of the current business. We know what's happened, we know what companies have gone through, and I continue to reiterate, I feel it's going forward what they're going to do. And we've seen this in companies who have pared down and they've got rid of some of their assets. You know, Link Energy, a prime example, they're offloading their coal assets. Now, they've been on sale for years, and now to actually offload those is a very much a positive thing. So yes, margins will come down to it, but the direction of the business and how they're going to actually go forward is a key point that I want to be looking at.
Are there stocks that you like ahead of that reporting season? How are you positioning for the next couple of weeks?
Yeah, look, I'm looking at certainly August. I feel that it'll be a stronger month in the Aussie markets before a September pullback. I think that historically we've seen a solid August reporting season, and a chance for us, as I said before, to focus domestically. Look, I think Qantas is an interesting stock there, and one to look at around that 250 level. I think on the resource side, Aquarius Platinum, it's a stock that I continue to like. I think that's very interesting. I like the platinum story there. Computershare is one which looks quite nice on the charts there, and I think that's quite an interesting play as we see more M&A activity, globally. Computershare well poised to leverage off that side there. So there's some key stocks there I'm really looking at in this reporting season. But we have a number we like, and Instep Pivot actually is one as well I'd like to mention on that. We've seen wheat prices at record high there. We've seen some interest more in the agricultural space, and IPL is quite an interesting play.
And it sounds like from just a couple of comments you're making, you're really looking at those valuations. I mean, I guess there's this stocks looking cheap. That doesn't mean that they're good stocks, but there are some opportunities, I suppose, there at the moment.
Yes, there are, and again, it's playing this August period. If you want to be trading this market, look over the next few weeks. September, I feel there will be this pullback, and then we'll get set for a more of a positive end to the year.
Okay, and the other one I just want to mention as well is Gloucester. We mentioned it earlier with regard to some news that it's had out today. Final thoughts on that one, because that's a key stock, I think. I think
it ties in quite well to what we were speaking about before, Brooke, which was that Chinese story about the demand for the iron iron ore and about this ongoing construction and domestic growth there. And I thought it was quite interesting that the Glosser noted, and I'll just read here, that some of their key points in terms of this acquisition of Noble's assets there was that the emergence of China as a net importer of metallurgical coal,
yes.
supporting demand there. They've come from a net exporter to a net importer over 2009. They cited the energy demand in India and China are expected to support coal prices in the medium term. So again, this is another company. We've got Rio as well. They're really focusing on this developing world demand as really supporting these markets going forward. So so I like that thematic.
Which is why we're always talking about these developing markets every day now. Thank you so much, Al, for joining us on the program today. Al from Aliom Financial Markets. We've got to go. We're back with Trading Day after this break.